Here on the weekly chart, we're going to look at GameStop. You had a cross under of that 200 underneath that 9-day EMA back here in December. Now we're getting ready to have that same exact thing again. You can see that even though when we crossed under there, the 9-day EMA basically didn't really move a whole lot, not a whole lot of divergence in between those two moving averages. It was very tight in here. We did get some divergence in here back in the end of February when you had that big pullback basically in the overall market where this 9-day EMA started running away from that 200 SMA, but now we're getting a cross back over. So the 9-day EMA is going to cross over, or you look at it, 200 is crossing over, however you want to say that. But that is exactly what's going to get happen, or that's what's exactly what's happening in here right now. You can see how tight we are here on the weekly chart. So it's all going to come down to these levels. They're currently both basically trading at the $26 mark. So that is going to be a key area for us. That's basically where we closed in here today, 26. So that's the big number in here. But obviously below that, we're going to be looking down here right around the 23.36. And then obviously below there, it's going to be this $20 range. And you can see that we have this basically a dollar range in here, this red, where wherever we get close to touching it, we just pop right back out of it. So that is going to be something that we need to be aware of. If we get down here to the 20s, it could be a time to kind of signal a buy and get a nice little jump in here again. That is if that $20 range does hold. Resistance wise, we're going to be looking at this $28 range, is 28.16 really. And then above that, it's going to be this upper trend line or this $35 area, whichever does come first. It's technically 34.83. I get that, but we're just going to call it 35 just because it's nice and easier to remember in here. Now, RSI is basically neutral, volume in here basically flat compared to where it was a couple years ago. But if we dig in deeper to the daily chart, you kind of see where all the volatility was, and you can see right here a nice little curve here, bouncing off, or I'm sorry, rejecting these 28s that we were up in here, basically mid 28s rejecting. Now we're starting to come back down. Might have to touch this 200 SMA here on the daily first before we work our way higher. That's currently trading at 25. But again, anything below that, you're looking down here at this $20 range. I'm not really sure there's a whole lot of footing in here. Maybe at the 24s, maybe at that 22 mark, but really $20 is where you kind of want to be at as far as where we want to look at for a major support in here. Resistance wise, again, you can see that we kind of went up and filled this little gap up here when you had that little gap day back in, what was this, March. So a little bit of a fill there, if you want to call it that. And then really above that, it's really nothing until you get this upper trend line here. Maybe a little something here at the 31s, but all in all, we care more about the 35. We care about this 28s. We care about the $26 level and this $20 level in here. Now, your implied volatility wise, your IV is super low in here. So low risk, low reward, nothing's really expensive. You only have around a 70% expected move in here by this Friday. And you can see what's happening over here ever since, let's just call it basically the mid April. You have a $27 high that you hit in here, and then the low that we hit in there was 25. So basically within 2 weeks, you had a $2 move. So that's not a whole lot of movement in here. Actually, what I say, 3 to 4 weeks, so you had a $2 move. So not a whole lot of movement in here. That's why you're getting that 74-cent expected move by this Friday's expiration. Next Friday, you got about $1.57. The following $2, we go all the way out to June expiration. That's right around a $5 expected move. Everybody's pricing in. So not a whole lot of movement in here. Need some IV, need some volume to come with it. But low risk, low reward in here. If you're just kind of playing for pennies and cents in here and you want to be kind of safe and you have a little bit of extra money to run, or maybe perhaps you want to start selling something against this to kind of get some more commons down here once we get down closer to the $20 range, that would be smart too. But again, overall, low risk, low reward right here. Take some cents off here and there, just kind of something to play with. You're not going to get any big moves in here anytime soon, especially up to the good side, I guess. So you're not going to get a big bull run in here up to this $35 range anytime soon, not unless this $28 range can kind of break and hold first. But again, we'll kind of wait and see what happens this week. 74-cent expected move, low IV, 28, 26, 20, and 35. That's going to be our levels in here that we're going to be watching for GME. That is GameStop. All right, guys, make sure to check us out on all of our social media. We also have a Discord service if you're interested, and you can find all of our socials in the description below.